You tell me again if they're any good. You can tell me if you think they're any use. It's from top to bottom, but obviously if they're grouped, then it'll be in opposite time order than the overall time order. You can see here at 8 o'clock, 8:15, one of the things that we noticed is at 8 o'clock, we're looking to try and bid. You know, at 8 o'clock, we're trying to bid the last pivot. Well, the last pivot at 8 o'clock, you can see it was away down here, so there was no bid. So we obviously pass on that, and there's a new superseding trade coming in at 8:15. And the superseded trade, of course, is the 8:15, and you're looking at 8:15. Well, there's 8, 8:10. There's 8:15 on this candle here, right? So there's 8:15. And the 8:15 is now looking for that liquidity, the main liquidity trade. In other words, it's the Jack Ryan trade. In other words, take it higher and sell into it. So we draw the offers line across our screens. And there's the offer that we're looking for. If this pivot had been a successful pivot, we might well have sold above this price, but it wasn't a successful pivot. It was a failed auction, so it can't be that pivot. We're going to have to go higher than this. So we got the liquidity out to the 103.70s, and that was our first short sell on the dollar. How did that do? Well, we can take a look at how the dollar developed. You can see it did okay. It came back up again. It came back into the same price level, and there was another sell away from that price. Now, obviously, if you're looking at it, we're now looking at the next trade, which obviously became 10:30 to 10:45. And obviously, forget the bonds, because that's not part of this discussion. It was just part of this screenshot. Bidding the last pivot at 10:30, 11 o'clock, right? So we're now looking at bidding from 10:30 to 11 on the last pivot. So obviously, we have to find the last pivot at 10:30, 11, right? So 10:30. So there wasn't a last pivot. The last pivot was away over here, right? So we're already on the liquidity. Do you understand? If we're already on the liquidity, there's no pivot price to wait for. We're ready to do business. Because remember, the whole point of this is if they accelerate the price lower, we're looking to bid the last pivot, usually because they're taking out liquidity. Well, they took out liquidity, they took out liquidity 20 minutes ago. It's already available for us just to buy into. So effectively what we do is we get a simple buy trigger coming into this dollar now. And that's from 10:30 onwards. And you can see that this candle here is what time? 10:30, right? This is the 10:30 candle. So this is where you got your GRT signal, correct? This is where you got your GRT signal, because this is the pivot. And what happened to the buy trade? Well, we obviously got a little response. Not much, but we got a little response. And the price came back down. Now, obviously, we've moved off the 10:30 trade. We're now on 11 o'clock, and it's now asking us to bid the last pivot again. Well, now that we're the last pivot, right? We're actually the last pivot price. So now we've got a new price to bid into. And how did the buy trade do? Not bad. We got a buy trade off the last pivot. We've managed to rally back up to the 50s, and we've had a nice little bit of profit. And then what happened? So obviously that's us now got through 11 o'clock, and then we move into the last series of trades. At 11:15, it's asking us to offer the last pivot, 11:15, right? So here's 11, there's 11.5, there's 11.10. The price drops off 11.10, creating a little pivot. Now, the only nearest pivot after that's way up here, so I don't think it's going to be that one. It's miles away. Miles away. It's going to take us an hour to get to that pivot. Well, there's going to be a lot of data in between now and then, right? So we take the last pivot we've got, and obviously we sell into, obviously the sell trend is a good trend, so I want to be short. So we sell into that pivot, and it goes well for us, right? It goes well for us. And then what happens? Now that's 11.25, 11.30. So that's this trade here, 11.15. See how it's always just before the trade takes place? It's not after the trade takes place. So in other words, you're getting a nod. You're getting a nod in the right direction to trade into these ideas. And then what happened? Well, at 12:30, we got another suggestion to look for offering the last pivot, right? At 12:30. Well, the last pivot was us. We were the last pivot again. The 11:30 pivot price is now the last pivot. So we're going to offer above that 54 print, correct? We're going to offer above the 54 print. What happened? The price traded above the 54 print. correct? So we're trading above the 54 print. Well, the Jack Ryan, Sam, is based around the 5 minutes and the 15-minute chart. So, I mean, the pivot's going to be basically the 5-minute chart pivots. And you would imagine that most 15-minute charts will show the same pivot prices as well. It's not a macro trade trigger. It's a swing trigger. It enables us an intraday swing idea. So anyway, let's get back to that trade. But Sam's right. I mean, obviously, you have to base your pivots around what time frame or reference you're using, but there's no point in using these tools if you're trading a daily chart, because it's obviously very specific to that particular manipulation. So what are we now on? 12.30. So the pivot price at 12.30, well, you can imagine that that's going to be the pivot price now, yeah? Paycheck. Looks good, doesn't it? Looks good. And what happened to the dollar on that last pivot? Now, when you think about it, the five arrows that you see on your screens are the 5 trades you would have got from the Jack Ryan storyline. And you can see how accurate the narrative ultimately unfolded on this occasion. Just the same way as you can see that the Jack Ryan narrative unfolded on the other markets, like these are all Jack Ryan trades. So we had the offers trade on oil, for example. We already discussed that. We had the offers trade on oil here. We had already discussed those Jack Ryan trades earlier. And in the Jack Ryan world, we also had these trades on the bond, the sell here, the buy here, and the buy here. Look, they're all perfect, aren't they? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 perfect trades. 10 perfect trades. Now, sometimes a pivot doesn't trade and there's no trade, right? It doesn't trade. It doesn't mean you don't still know about it, because it's still available to know about. Sometimes somebody steps in and runs the sweep, or runs a front-running buy program or sell program, and it stops getting involved. But you can see out of 10 trades, these are spectacular. Not good. Absolutely bloody spectacular. There's nothing like it, guys. And yet it's a classroom we all did a short while ago to understand the concept, the idea of what manipulation means. And it's obviously a great day for a webinar, because every single one of them's hit a home run today. And people will say, well, that's unbelievable. Sign me up for $1 billion and Kim will be very happy. But the reality is that it's not always going to be as good as this. And, and that's the God's honest truth. It's not going to always be as good as this. But my God, that's unbelievable, right? That is sensational trading from something that's basically fully automated to find you some of the best possible trades. Now, you've still got to go into the chart. You've still got to look for the order flow. You've still got to look for the lean. Just because it goes above that price doesn't automatically mean that's the price you're going to sell it at. You're going to try and work your trading, your other ideas. That makes you a trader. If all this was a sell trigger or a buy trigger, you'd simply just be an order taker. And I don't want to teach order takers. I can just do it for myself and not have any order takers, right? It doesn't teach you anything, and therefore if it breaks, or if I decide to stop using it, or decide to withdraw it, decide to sell it to one of the banks for $1 billion, you have the tools to be able to do it for yourself anyway, which makes a lot of sense, right? You've got the tools to do it for yourself anyway. So it doesn't matter. The reliance on this type of thing is what matters. If we ever develop traders that rely on these tools, this type of signal, this type of process, seeing it on a trade log or whatever, well, then it's a bad day. It's a very bad day for all of us. We need to know how to develop these ourselves. We need to know how this works. We need to figure this thing out. And that's exactly what we try and teach, obviously, in classroom, about how to figure stuff out. But anyway, this has been a sensational morning. You could probably agree with me that is as good as it gets. It really was as good as it gets this morning on the JRTs. The sells on bonds, the buys on bonds, the sell on oil, the buys, and then the sell on oil that we had on this one, and then the dollar sells and buys for ultimately this incredible response. Yeah. So we'll obviously be talking a bit about this in classroom, because obviously this is the whole point about what Kim wants to do these new webinars on, is this idea of the becoming more systematic, to try and learn these processes. That this is obviously a very systematic process. It's on the screen. It's on your screen. So, I mean, it's got to be systematic if it's on your screen. It's a system. So it's systematic. I had a question about